Imagine for a moment you're standing in the middle of a bustling farmer's market. The air is filled with the aroma of fresh produce, and you're surrounded by a sea of people eagerly examining the goods. You're there to buy apples, but suddenly you overhear someone passionately extolling the virtues of a particular vendor. "These are the best apples in the whole market," they exclaim. Almost instinctively, you follow suit, ditching your own plan and heading over to the vendor, mad, grabbing a bag without much thought. Now, what just happened here? This little detour in your apple buying adventure is what we call a psychological bias, and in trading, these biases pop up all the time, often leading us down a path we hadn't planned. Today, we're diving into the fascinating world of psychological biases in trading. And trust me, this journey can truly transform the way you understand and approach your investments. The realm of trading and investing is fraught with emotions. We're not robots. We're human beings full of feelings, hopes, and fears. And just like that moment in the market, our brains are constantly influenced by the noise around us. We fall prey to the stories of others and the fear of missing out. One of the most common biases we see is the herd mentality. Much like the Apple example, it's the tendency to follow the crowd, thinking everyone else must know something we don't. But as you might imagine, just because many people are heading toward one vendor doesn't mean those are the best apples in town or the best stocks to invest in. A classic example in the financial world is the dot-com bubble of the late 90s. The frenzy for internet stocks was immense. People were pouring their life savings into companies that sometimes didn't have a viable business model, all because everyone seemed to be doing it. It was the classic herd mentality, and when the bubble burst, it left many portfolios in shambles. Let's consider another bias, confirmation bias. This is our brain's sneaky way of favoring information that confirms what we already believe while ignoring anything that contradicts it. Suppose you're convinced a particular stock is going to skyrocket. You might find yourself only reading news articles that support this belief, conveniently overlooking any red flags. This bias can blind us to potential risks and lead us astray. So how do we navigate these psychological traps? First, it's about awareness. By acknowledging these biases exist, you're already a step ahead. It's like being in that market, aware that the buzz around the vendor doesn't necessarily mean those are the best apples. You start questioning and thinking critically about your choices. In practice, this means doing your own research and having a solid investment plan that you stick to, even when the noise of the market gets loud. It means diversifying your portfolio instead of putting all your eggs in one basket just because everyone else seems to be doing so. And it means having the courage to go against the grain sometimes, trusting your well-researched convictions over the popular opinion. There's a metaphor I like to use. Think of your investment strategy as steering a ship across the ocean. The sea is vast and unpredictable, much like the financial markets. There will be storms, times when fear and greed drive wild swings. But by keeping your hand steady on the wheel, focusing on your long-term destination, and being aware of the winds of bias that might try to throw you off course, you can navigate these waters with greater confidence. Our emotions in trading, fear and greed, are powerful forces. Fear can make us sell in a panic, abandoning our strategy. Greed can push us to take on too much risk, chasing the allure of quick returns. The key is balance, allowing logic rather than emotion to guide your decisions, knowing that building wealth is often a slow and steady process, not a fast-paced race. I remember early in my own investing journey, I was caught in the excitement of a hyped-up opportunity. Everyone was talking about it, and I jumped in without a second thought. I wanted to be part of the success story I kept hearing. But what I didn't do was pause to evaluate the fundamentals or align it with my personal financial goals. It was a costly lesson. but it taught me the importance of stepping back, taking a deep breath, and questioning whether my actions were truly in my best interest or just a reaction to the noise. In closing, trading and investing aren't just about numbers, they're deeply tied to our psychology. Understanding the biases that influence our decisions can help us make more informed, rational choices. When you next find yourself on the verge of a financial decision, take a moment to reflect. Are you following the crowd, or are you following a path you've thought through with care? By recognizing and addressing these psychological biases, you're not just protecting your investments, you're cultivating a mindset that can lead to lasting, long-term wealth. Remember, the journey to financial success is as much about managing your emotions as it is about managing your money.